So today we're going to do the UK portfolio update. I do this on the YouTube channel every 3 months. So the next time I'll do this update will be July, if my maths counting was very quick and correct there. So I'm going to go through how the UK portfolio is doing. I'll do the US one probably next week, and you can see how the US portfolio is doing. And yeah, I've done this for many years on the YouTube channel. It just keeps up the transparency so you guys can see how everything's up, the position sizing, what's in, what's not out there, or what's gone out of there. And it just ties in the UK stocks I'm buying series as well. But if you do want to see a more of a regular update, so I actually do it every month on the Patreon, you can join through the link in the description. £5 a month, and I post a monthly update on there, so you don't have to wait every 3 months for an update on how the UK portfolio is doing. But here we go. This is how the UK portfolio is doing at the moment. So I'll try to spend a minute or two on every stock in the portfolio, but overall, yeah, I'm really happy. The portfolio is doing really well. There's around 20 stocks in here, which is about right for the amount of money that's in there, in my opinion. Quite a nice, diverse portfolio. I'm quite happy with all the position sizing in here. There's only really 2/3 stocks that I'm unhappy about, but overall, if I'm only unhappy with about 10% of the portfolio, that's not too bad at all. I will take 9 out of 10 stocks that I'm happy with. So yeah, I'm really happy how it's doing, especially how we've come out of the bear market. And especially when you look at the UK stocks, haven't really rallied as much as the US stocks. It's definitely in a good place, I feel. So I'll try to spend a minute or two on every stock. Starting with the one at the top, we're going to start with Aviva. So Aviva, yeah, doing really well. I keep averaging up on the position, but I'm still up 23%. I like Aviva. I'm getting a solid 6.7% dividend yield. Obviously, I'm getting a little bit more than that. I'm getting towards a 7-8% dividend yield with the average that I have. So yeah, I'm really happy with the dividend yield that I'm getting off here, and also with the share price appreciation. It's about what I could ask for. Ideally, when I bought it, I wanted about a 50% return in the next 5 years, as well as collecting nearly an 8% dividend yield, and that's definitely on the way of doing that. It's probably outperforming my expectations there. So yeah, really happy with Aviva, and I don't even think it's that bad of a valuation right now, to be fair. So yeah, I'm liking Aviva at the moment. Next one, Airtel Africa, we're up 4%. It's not really done anything for a while, Airtel Africa, to be fair. If we zoom out a little bit, it hasn't really made a big move in the last 2 years, really. So yeah, it's been very stagnant. A lot of it is to do with the FX impact that's going on at the moment. It's having to take a lot of currency devaluations in, which has been frustrating. So if it wasn't for the currency devaluation, this company would look very impressive, but it's just holding it back at the moment. If that currency devaluation goes, which I think it will do, it should go back up to very good growth and very good earnings as well. I mean, if we're talking about a business here that's going to do 782 million in profitability and it's valued at 4 billion, I don't think it's going to stay down at these levels for too long. So yeah, it's been a bit frustrating at this time frame, but if it does sort out the currency, well, I guess it's out of its hands really, but if the currency impact does go, this should do really well. And hey, in the meantime, at least I'm going to be collecting a 4% dividend yield, so I'm still getting something out of it while I'm holding here anyway. So that's Airtel Africa. It's crazy to think that when I first started buying this stock, my average would have been up 188%, but I keep averaging up on this position, and now I'm break even. It's crazy. So yeah, that's Airtel Africa anyway. Next one is Asos. So I'm down 72% on this. This is one of the 3 stocks I mentioned at the start that I'm a bit unhappy with, but I thought the last update was okay. I think that they can turn the business around. Asos has been in bad positions before, and they have turned it around, so I think they could potentially do it once they sort out the current stock issues that they currently have going on. AlphaWave up 41% on AlphaWave. I mean, what a performer this has been since I've been buying this stock. Since I started buying this at the start of 2023. Yeah, the stock is up over 82%, but same again. I've been very impressed with the financials, so I keep averaging up on the position. I originally did buy, and then I did sell out the position for was it like a 30% gain or something, and then I bought back in after that. So yeah, it's been a really good performer. Barrett Developments having a bit of a wobble at the moment because of the announcement between Barrett and Redrow. Overall, I don't think it's that big of an issue. I think if they do get the cost savings they are projecting, they should do very well. And if the housing market does do what it's supposed to do in the next 5 years, and we are so far behind on the supply to the demand, I think Barrett will do very well, and we'll see the days where Barrett goes back up to a £6 stock, and as well as that I'll be collecting a lovely dividend yield. So yeah, I am very happy to have Barrett in the portfolio. I think he'll do very well and collecting a nice dividend as well. Boohoo down 77%. So this is the second of the three stocks that I'm not really happy with at the moment. I generally think the days that Boohoo is in this portfolio are numbered. They financially haven't performed. They show me no signs that they're moving in the right direction. They haven't changed the management team, which I think is inadequate. Yeah, I'm very worried about Boohoo at the moment, and we're overdue another update. They don't seem to be giving us any updates at the moment, which as well is frustrating. So yeah, I think the days that Boohoo are in the portfolio is numbered. K-Box, we're down 7% on K-Box. I didn't even realise this until I was actually doing this portfolio review that I've gone down 7% on K-Box, but yeah, that's a business that's done very well in the last few years and should continue to do very well. Same again, it's not a bad. I've not actually got a slide up for K-Box, but not bad of a valuation and collecting a lovely dividend on that one as well. We've got some Card Factory. We're up 37% on Card Factory. I think that shows you how much I've been averaging up on this position. Because if you remember, it's a stock that I've held now for nearly 4 years. And if I did still hold my shares from the time frame when I started buying, I'd be up 223% on Card Factory. But I keep averaging up. On Card Factory because I think I can make more money off it. 6 times earnings. I think that's way too cheap for this business at the moment. And it does seem to just have these jumps up in the share price, and then it kind of flatlines for a period of time, and then it jumps up on the share price. So maybe we do another jump up on the share price. I mean, the big thing that we'll probably see Card Factory go on its next roller is the dividend coming back. We are expecting at some point the dividend to come back. They had to pay down some of the debt. The conditions in the debt was that they had to pay back the debt before they do pay a dividend, and the debt has been paid down a lot more recently, and I think the last payment is due this year, so we should see the dividend start coming back. And when the dividend does start coming back, I think that it'll be a very nice yield. I mean, if they go back to their old dividend, it'll be actually a 13% dividend yield. Now, I don't think it'll be that much. I think it'll probably be about half of that. So even then, we're talking on good, even less than half of that. It would be a good 4-5% dividend yield on this as well, and at 6 times earnings. I think you might see a few buyers come into this one, so I think that's what we need for that one to happen. Dark Trace, what a performer this one has been since I've been buying this one. Same again, I just keep averaging up. It's a stock that I started buying during the start of 2023, one of the 2023 stocks that came into the portfolio. Since I started buying it, the stock is up over 73%. Same again though, I keep averaging up on Dark Trace. It's one of those stocks that just seems to have dips out of nowhere, and I go, right, if you give me a dip, there was one the other day, and it dropped like 12-13%. I was like, okay, average up again. I mean, realistically, the numbers are so impressive, and it's currently trading at 5 times forward earnings. And if you look at, there's no data coming up here, but if you look at the growth that they're going to do this year, it's absolutely crazy. So yeah, high quality UK growth stock. We don't have many of them on the UK markets, but you can see that's getting quite a big part of the portfolio now. Flutter up 34%. I keep thinking about what to do with Flutter. I would like to make it bigger, but I never end up buying it. Jet2, same again. I'd like that to probably be bigger. It's one of the stocks that I actually haven't averaged down on that much since I started buying it. So again, this is a stock that I've owned for around about 4 years now. You can see that I'd be up over 205% if I kept my average, but there has been averaging up on it. Not as much as Card Factory, not as much as the likes of Dark Trace or any of those stocks. So yeah, 8 times earnings, it's still not bad. I mean, I don't really like airline stocks, but if I was to buy one, this is the one that I'd buy for sure. Greg's up 98%. I'm just keeping Greg's. I think it's a good valuation. I get a good dividend yield. My dividend yield's around about 4% on this one. I did sell, I'm sure most of you guys remember that have been watching the channel for a long time, I did sell half my position out in 2021. For over 120% return, and then I've just kept that half, and I probably will keep that half. Hollywood Bowl, we're up 85% on Hollywood Bowl. I think I'm really looking forward to the Canada expansion, and I don't think it's that bad of a valuation as well. 16 times earnings. Personally, for me, I'm picking up a good 5% dividend yield as well. I'm just planning on holding that as they expand into Canada. Really, JD Sports up 7%. Now, if I did this last week, that would have actually been down. Funny enough, but it had a cracking day last week, up 15%, and it's about time. It's a company that is amazing balance sheet, good amounts of profitability. It's realistically trading at 9 times earnings. Google have this a little bit dated now, and that dividend has so much potential to grow. So yeah, JD for a long time I've been on the YouTube saying, like, before this bounce up, I was like, that profit warning was not the profit warning. The reaction to the profit warning was ridiculous. That 30% drop on that profit warning was crazy, and anyone that capitalized on that profit warning, obviously you've got a really nice average. That was one of the big standout stocks for a long time that I've seen, and I've gone, that's a good buy, is that, if anyone picked that one up. Legal General up 14%. Yeah, happy to hold that one. It's kind of like a copycat of Aviva. I expect a good 50% share price return in the next 5 years, and as well as that, I'm going to collect a good dividend yield, around about an 8% dividend yield. So yeah, I'm happy to hold Legal in general. Money Supermarket is getting to the levels of JD Sports. Very interesting stock. Now the difference is that JD Sports went down to like 8 times earnings, where Money Supermarket, realistically, it hasn't got that low. It's still at 16 times earnings, but you are getting a 5.5% dividend yield. I think if that does get into that 6% dividend yield range, then I'd put it in the category of the JD Sports, where it's like, that's an opportunity, but it's getting close to it. That's one to watch. I'm really liking that opportunity at the moment in Money Supermarket. If that gets to a 6% dividend yield, I'd hike that up to a position size like Holland Bowl for sure. Mobico, down 27% on that. Yeah. I'm on the fence about this one at the moment. I'm waiting to see if they do the full audited accounts, and I'm waiting to see Q1 update and see what's going on there. I haven't put it in the pile of the free stocks that I'm unhappy with, but I'm getting close where I'm like, they need to step it up here. The management team have performed below my expectations in the last few months, so I'm watching these guys. I'm down 27% on that one, and lucky enough, when I got to about break even about a month ago, if you guys remember, I did sell off a good chunk of my position there, just to reallocate that position, and then that does look like a very good decision there. So we'll see what happens. Supreme, we're up 16% on Supreme. I actually don't think Supreme's that bad of a valuation, really. 8 times earnings, 3% dividend yield for a company that's just grown 62%. Net income's up 181%. It's not too bad at all, is it? S4 Capital, yeah, S4 Capital. I actually still think S4 Capital will do okay. I'm still on the fence where I think that S4 Capital can still do okay. I don't think it might do to the levels that I thought it would do, but I think I could still get out break even or even make money on it. And I think the speculation now is that there's people looking at potentially buying it out potentially. That's what the rally was last week. So yeah, I mean, I'm waiting to see until the marketing industry recovers with that one, and then I'll decide where to go with that one. Team 17, I'll keep that nice and brief because I'm actually thinking about making a decision on that one in the next coming few hours, so I won't say too much on that one. YouGov up 3% on YouGov. Yeah, this was one that I bought. It rallied up massive, and I was up a lot, and I was like, I can't buy any more at these levels. However, it has had a dip recently off its earnings. I've got to say though, I was pretty disappointed with its update though at the same time. So it was a bit like, yeah, I've been waiting for a dip to buy, but now I've got the dip to buy. Like the numbers that I saw were like, that was a bit disappointing. So yeah, I think with YouGov, if I am going to buy, I need it to probably drop even more than where it's dropped right now. So that's kind of just hold and see what happens there really. So we'll see what happens with YouGov. But overall, yeah, that's the portfolio. Like I said, I'm quite happy with how it's going. The only things I'm concerned about is probably Asos and Boohoo, really. Even though S4 Capital's down a lot, I still think that will probably do okay. Buying wise, I think really the big buying wise that I'm looking at here is I won't mind buying Barrett at these levels. I probably wouldn't mind buying a bit more Money Supermarket at these levels. But everything else, I'd probably have to see a dip to buy. And like JD Sports, I'd probably have to see it drop 10% to buy any more now. There is a new stock I'm looking at adding into the portfolio this week, so that might happen. So I'm having a think on that. And really, yeah, there's not really that much change that I can see apart from them two stocks that I might nibble at, which is Money Supermarket and Barrett, and the other one is potentially a new stock into the portfolio. So yeah, there probably won't be that much change over the next coming few weeks, but you never know in the stock market, things change very quickly. So it only takes one profit warning and everything can change. So we'll see what happens anyway. So yeah, hope you enjoyed the video, guys. See you in a bit.